I would say that again, we go back to the hedging strategies of various refining and marketing companies or refining and marketing divisions, if you're talking about the likes of Shell and BP. And the way I perceive it is that their hedging strategies are drawn up over a lengthy period of times, medium to lengthy period of times, and when the price goes up, they protect themselves, and when the price comes down, they also sort of protect themselves. It evens out, but what it is not really exact. I wouldn't say it's good news for the consumers, as you've seen a lot of discourse out there saying, well, I don't feel it when I fill up my car. And the reason you don't sort of get an immediate benefit out of it is that the trickle-down effect is very, very slow if the refining and marketing company in question has taken out an elaborate hedging strategy. Another thing is that a huge chunk of it is taxation. The other bit is taxation. Especially in the UK, the tax takings of the Treasury, or should I say the tax percentage, has been constantly rising since Gordon Brown stepped into the Treasury as Chancellor. And while you will see that the current administration says it's pro-motorists, the tax takings and the Treasury's sort of connect with that is so huge that it will take a very brave Chancellor, especially in these times, to cut those tax takings. So you will, sad as it might sound, you might not get more of a benefit than a couple of pence, if you're lucky.
So is unrestricted speculation really responsible for the wild swings in oil prices that are hurting motorists and economies the world over?
Well, first of all, what I'd like to say is that speculation, to a certain extent, in fact to a very large extent, reflects the wider market sentiment. So yes, there is wild speculation. Yes, as I gave an earlier example of hedge funds, that sometimes people get their speculation spectacularly wrong, but you can't also totally discount it. So it has a bearing. Now, is it a major concern for the Joe motorist? Yes, it is, because in one way, shape or form, where the crude oil price is and how it affects the ultimate price at the pump does have a bearing, because after all, crude oil is the raw material for refineries to churn it out. But we must remember one thing, that a huge component of prices at the pump in the wider European Union is down to taxes. And within that sort of wider dynamic, I think ourselves here in the UK and Sweden have sort of the highest taxation rates of prices at the pump. So what we're looking at on occasion is that sometimes as much as 65 pence in what people are paying per litre, or as high as about 72 cents in what people are paying in the wider continent is down to taxes. I would say roughly 10% of the price at the pump is down to crude oil. You probably add another 10 to 12% on the refiners' margins, but quite a bit of it is bottles down to taxation, which is why you see that prices in the States are practically half of what you pay on average in Europe.